The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And I got one thing to do here. There we go. Another interesting day in the markets. Certainly the Chinese curse applies that may you live in interesting times. We're up 31 points on the S&P cash today. One thing different is the volume. It was pretty strong probably to 10:30, 10:45 and fell off a cliff. Pretty much since then been fairly light. 2.2 billion shares on the New York Consolidated Tape, which is still good if we went back 3-4 weeks. Not big if we go anywhere else. So volume kind of falling out. Added several positions in both my long-term newsletter, the Tech Insider, and the short-term newsletter, or shorter-term trading newsletter. And that was yesterday. I'm going to say, okay. The individual positions are really looking fairly good here, I think. The broader indexes may be a little tougher to pick exactly when they fail. My belief is that you want to be kind of short right now. You've got probably about 15 points of risk higher. And if I'm right, you're going to walk in and you're going to find the thing 30 or 40 points lower on the S&P cash, that is, and that will be it. So they will probably not let you in if I'm on the right side of this trade, and that means that you have to get on the right side now. As yesterday, the time to be buying puts was yesterday. And today, I guess you can still get into them. But the problem is that you have to buy them while the market's going up, not once they're headed down, because then you're going to pay monster premiums. And normally you like to wait and react to a market. Unfortunately, if you're going to buy leveraged positions, you almost always have to go out and start anticipating a little bit. Ideally, you would wait for that, but you can't make the big bucks if you wait until everybody knows what's evident, because then the premiums will skyrocket, and that will be it. Anyway, pretty good. I'm feeling pretty good about my positions right now. Like I said, you always want to be thinking asymmetrically in a bet, and right now I'm looking at probably, or when I put in my positions, I was looking at 20 points higher on the S&P cash, and or 130 points lower. So I don't think you get much better than that. But you never know. Got a comment in the den. VIX, the 15th is not good for bears. It's actually excellent for bears, because you can actually start buying puts. Problem with VIX in the 30 is, guess what? All those options are way too expensive to buy. So I would say you're on the opposite side of reality. That is, I want the VIX to be low when I'm buying puts and calls, and I want the VIX to be sky high when I'm selling them. And we'll have to see. Anyway, we'll have to get into it. Anyway, we've got some interesting stuff to talk about here. But I thought today was a pretty good day to plant my flag, and we'll see how the next few days rolls out. On this day in 1968, memberships or seats for the New York Stock Exchange are going a rate of $7,000 to $8,000, or about $80,000 in today's dollars. Not bad, considering seats now sell for $1.5 million for a place that no one sits in. Just it's amazing to me if you ever see one of the wide shots accidentally on CNBC or Bloomberg of the New York Stock Exchange, but there's about 5 people in it, and most of the time they shove them in behind the people of the talent that is on screen, or it would look like a ghost town. And kind of interesting. Almost all the trading now, of course, happens in New Jersey. But I'm wondering why seats sell for $1.5 million for a place that no one's at. Maybe it's just because you want to say you've got a seat on the New York Stock Exchange. I don't know. Anyway, you can always check these things out on Jason Zellwig's This A Day in Financial History blog, which I like looking at each day. When we look at what's going on out here, of course, the big news is a couple of earnings that people thought would be disastrous. And actually what they had wasn't all that bad. But what I'm watching, and I think the market, the people that really are in the know are going to be watching, is just how Apple does. The problem with Apple right here is that it had a high that was fairly large in volume, and that was on September 21st of 2012 at $100.72 split adjusted. The problem was it had 140 million shares split adjusted. Today at noon, we were printing just 33 million shares, and right now, 47 million shares. We're going to come in, folks, with maybe a little more than a third of the volume. Everything above that $172 from September 21st of 2012 sets up a false breakout. Normally, you want to give it about 3 days. We've given it 3 weeks, and guess what? Still no sign of strength, and no sign of strength today, either in Apple. You do have a higher price, but this is when I talk about extremely narrow leadership in a market, and that's when you know a market is incredibly weak. It is like the tree that rotted from within. You look at it and you go, pretty nice. You push on it, whole thing falls over because ants have eaten the inside of it out. That is exactly what the market is all about when you go up with a higher price, but not the accompanying volume. And again, I'm sitting here watching the volume with one eye to see whether it comes in before the end of the day. But 2.2 billion shares at this level is telling you the same thing that we've seen for months, and that is as soon as you get to a certain level, no one wants to buy anymore. You get these fairly decent pullbacks. People will buy them as soon as it gets back to the par value. They're nowhere to be found. Everybody wants to buy the pullbacks. No one wants to buy the extensions. And I think that's kind of where we're at right now, seeing the last few people really get squozen. But we'll see. I may be right on most of my positions. I may be wrong on one by being a little early. But I think overall, pretty happy with them. And I'm going to be watching Apple very closely here. Of course, it only takes a handful of people once every fund in the world is long something like Apple to see that you need to have somebody on the opposite side of that trade to get it to go any further. And that's what is fairly tough. Yesterday, I talked about the lesson of a one-man shop, and that was the idea that video production, that the way it was being sold. In fact, we own the equipment by the company that did it, that I sold to. But basically, we're telling everybody that a single guy could, make Citizen Kane with a camcorder. This is like the early 90s, basically selling the sizzle, not the steak. But we were talking about 3D printers. And the hype, a lot of times, is incredibly easy to overwhelm the reality, and that is, does everybody need a 3D printer? Probably no. Will everybody have a 3D printer one day? Probably no. Does it take some education on materials and time and talent and an understanding of 3D coordinate geometry and software and a need to actually print something that maybe you want to do? The answer is it probably lies somewhere between the truth that everybody's going to have one and no one needs one. But almost always there's a core or a part of a big lie, and that big lie is that everybody needs to have one. And, of course, on the opposite side, the bear case is no one needs one. In 3D printing, that is true, but when we look at the way that 3D systems was savaged yesterday, you always get these moves that everybody believes that only a single stock, and it's not. It's always a industry-wide thing. You want to be looking at the sector as a whole, not an individual stock. And why one stock may hold up longer than the rest, eventually they will all crack. And we've kind of seen that in 3D printing. But it's not over then. They always get into what is going to be distribution. Let's see if I got this right here. Anyway, yesterday I talked about some of my favorite books, and one was Trading in the Zone. Somebody asked me why I liked it, and I said, well, there's a lot of rules for you to handle yourself psychologically. There is a nice book on it, but I wanted to get into this just a little bit today, and I think I've got enough time here. But this is just a short passage, but a lot of people go, well, you didn't time the market exactly at the right minute. And I said, well, you probably hardly ever do, and there's always a reason for it. And I'm going to just play this little segment here. But this is a part in the book where basically it's apocryphal, where they're talking about a guy that was a old hat that had been in and around the commodity markets his whole life. He was 65 or 70, and some guy comes in probably in the 40s or 50s and says that I've got everything mapped out. I've got technical analysis. That's all there is to trading. And I think there's an education in this. The analyst was using a method called point and line, developed by Charlie Drummond. Among other things, the point and line can accurately define support and resistance. One day, as the two of them were watching the soybean market together, the analyst had projected a major support and resistance points in the market that happened to be trading between these 2 points. As the technical analyst was explaining to the chairman the significance of these 2 points, he stated very emphatically, in almost absolute terms, that if the market goes up to resistance, it will stop and reverse. And if the market goes down to support, it would also stop and reverse. Then he explained that if the market went down to the price level he calculated as a support, his calculations indicated that it would also be the low of the day. As they sat there, the bean market was slowly trending down to the price the analyst said would be support or low of the day. Then it finally got there. The chairman looked over to the analyst and said, "This is where the market is supposed to stop and go higher, right?" The analyst responded, "Absolutely. This is the low of the day." "That's bovine excrement," the chairman reported. "Watch this." He picked up the phone, called one of the clerks handling orders for the soybean pit, and said, "Sell 2 million beans, bushels, at the market." Within 30 seconds after he placed the order, the soybean market dropped 10 cents a bushel. The chairman turned to look at the horrified expression on the analyst's face. Calmly he asked, "Now where did you say the market was going to stop? If I can do that..."
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
1960 on the S&P cash, 2.34 billion shares. As I said, volume has really tailed off here late in the day. We'll have to see if there is any volume coming in. But right now, it doesn't look like a whole lot. Of course, it doesn't look good for a big, nasty close today. But like I said, I have a feeling that the way that this market, if I am right in being bearish, will be that you walk in one day in the morning and you find the market hugely down and no opportunity to short the thing. That's normally the way these rather violent moves in markets that are topping out work. They just don't let you in and they don't let you out. So it is going to be interesting. But, yep, up 34 points on the S&P cash, but not a lot of juice out here. My guess is that they're running the last of the shorts that went short probably at the bottom. These guys are probably closing their trades right now. So we will have to keep an eye on it. Anyway, not a bad day out here, but I digress. We've been talking about some stocks, and in the second half of the hour, we're going to get into a lot of confluence levels so people can start seeing it. I wanted to look at a few of the stock, CSCO. Of course, the talking heads on CNBC are euphoric today. And that is all about a handful of earnings. Last night, most of them were pretty horrible. There were a couple of them that were higher. Tractor Supply was one of them. If you saw this one, you had to know that you wouldn't want to be short it. I mean, this one had everything you look for, which is a test of a high volume low on light volume. In the July 10th low, $57.20, 9.2 million shares. Went through it, closed back in the range, and that's all you really needed. I wish I would have caught this one. October 15th, $55.95, but only 1.4 million shares. Just no volume. And again, I like it when there's 50% lighter volume, when there's 20% of the volume on a low. This is normally what you get, and I'm going to kick myself for missing this. You got volume here, a sign of strength, a nice gap. Of course, you're going to wait for this thing to come back down to about $64, and there's a nice gap that this thing came in at about 63. But if you were bullish, you'd probably have to wait for this thing to get back to 63 to buy it. But interesting nonetheless. Okay, MX. After kind of getting beaten up a little bit, CarMax is back, and I suspect you're going to be very close to pulling the string on this one short. Right in here. This thing came down on horrifically high volume on the 23rd of September of 10 million shares. We're up today on 4.3 million shares. Of course, they had some decent earnings, but certainly not seeing any kind of love for this stock today compared to the huge down day on September 23rd. And that's exactly what you're looking for when you miss one of these huge gaps down. Is get that gap filled, get it filled on lighter volume, and in this case, half the volume, and then wait for maybe a test of the top on, again, lighter volume, and come back into it. O'Reilly Auto Parts, another one that everybody's pushing on the way up today. Nice little gap up. Now, I was watching this thing. It had been hanging around at this high with not a lot of volume, but pretty much equal to the February 18th high at 1 million shares. You're up on 1.2 million shares today, and I'm not going to call that a sign of strength. I'm going to say that you may have finished up a three-gap play, and the question is, does that take this back down to $120 on a failure? And I think if we don't see a great deal more volume when you come back in, this thing's probably going to fool around up here a little bit and then come back down. But I could see this come back and fill the gap all the way to 120.34, and that's from the December 4th, 2013 low. Celgene. CELG. Of course, you can always give me a call at 877-927-6648, and you can email me at path@tfnn.com. I'll check my messages during the break, or post a message in the den like Peak D just did. So he's looking at a breakout, but again, we're just about higher than the volume on September 25th of 6.3 million shares. We've got 6.7 million shares. You'd like to have probably on a breakout like this about 9 million shares. You got a ABC. The question is, are you going to get the sign of strength that you're really looking for? And you had, 8 million shares the other day? I'm not feeling the love here either. Anyway, we'll be back in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we look at the kind of end here, we're going to go to a caller in just a second. But Celgene, the retrace, basically 45% retrace on this, and it is breaking it, and it does have higher volume. So you could get a projection out of Celgene of 112.81. I would like to see about 9 million shares by the close today. So not beyond the scope of things, but you want to watch that. If this thing has 300,000 more shares before the end of the day, I would be watching it. But keep an eye on it. We're going to go to our caller, and that's George in Tampa. How you doing, George? Hello?
Yeah. Can you hear me?
Yeah, I can now.
Thanks for taking my call, Dave.
Okay.
Well, I was calling in regards to a CDE.
Mm-hmm.
And I had bought it 2 Fridays ago and then sold it this past Friday. And I put a bid in at 418. Mm-hmm. But then last night when I was looking at the chart, I had it on a monthly, and way back in 2008, like November, had to swing low there, $3.60, and it looks like it wants to go there. I just wanted your opinion.
Let's look back on this thing here for a while and take a look. Give me just a second here. Wow. It's years ago.
Yeah, but it looks like it's in that.
I'm still trying to get back to it. There we go. Okay. So you got 360 on November 20th, 2008. That's the low you were looking at. It's got a nice little gap up there. And the answer is, I would imagine, yes, you're going to see that. It's just hard for me to get all excited about buying gold right now. Again, I think we're going to get some kind of washout. I haven't seen it yet. And I think it's going to take the utmost of patience to get back down there. Like I said, I think a lot of these gold miners are going to go out of business. I don't think they have the cash to make it 3 or 6 months on, sub $1,400 gold. So I would say that, yes, you're going to get that. And I think I'd say probably 80% chance you're going to get that 360. And that's what I would be looking at for long term. 1.3 million shares, it's not a whole lot down there to give it support anyway. So, to me, we are, and I know others at TFNN don't agree, but I think we're in deflationary times. Now, maybe that changes, but I don't think it changes before this hits 360. I was talking to Andy Heck the other day, and I said, well, I was kind of ticked off because I missed JDST again when it got down under $15. And to me, I'm on the opposite side of this trade. I think a lot of these guys are, if you've heard my opinion before, most of these guys would not be able to be in any other business. It's not like you aspire to be a gold CEO for the most part. I guess there's a handful of them that are pretty good from what Tom says, but to me, most of them are horrible managers. They almost always buy at the top, sell at the lows. They can't figure out anything. If they were smart, they'd probably hire a gold trader to tell them what to do, but they don't. I
was just trying to get this on a bounce is what I was going to try to do.
Yeah, I am not feeling the love on a bounce down here on any of these companies. Now, remember that these companies, even if they shut their mines down, it's still horrifically expensive to hold it, to keep pumping water out of them and do everything else to them, right?
Right.
And most of these guys have bought, I don't know about Coeur d'Alene, you might ask Tom during his show because he knows individually these companies. But so many of these companies have bought huge amounts of gold in the ground that, the cost of production is high. And they need $1,400, $1,500, $1,600 to survive. And my guess is that most of these companies, you're going to be able to buy them for pennies on the dollar for, I would imagine, about a fourth of the gold companies out there, pennies on the dollar, when they go back and start issuing more shares to get cash because they've run out. And that's probably what's going to happen. I would much rather you look at probably trading gold than trying to bottom fish out these companies until gold moves higher, and moves higher succinctly. I think we still have a good opportunity to go back and hit $1,100 on gold, and it'll probably come in like 2 days, drop $100, scare everybody out, and then maybe you'd want to be gold. Yeah, maybe you'd want to be gold, bottom fishing on some of these companies. But at the same time, I would be looking at their financials incredibly closely.
I know CDE right now is losing money on their silver, but they seem to have enough cash to last for a while. That's what I was looking at.
How many quarters?
All right, Dave.
How many quarters do you think that they can go?
Oh, shoot, I forgot what it was now.
That's fine. That's the problem, though. That's the problem. I assume that a great deal of these companies, and the stock market likes to paint with a broad brush, Even if these guys do, you're going to see other companies go out of business, and it's going to be the Roach theory in the stock market, which is, ooh, that guy went bankrupt. Who's going to be next, right? Suddenly they're selling all of them, whether or not Quarterline has that kind of cash too. And that is the problem when you get into a market like this, and especially so many extremely weak companies down at the bottom. I would be extremely careful about trying to buy any of these bottoms until you get a really good indication. My guess, like I said, is you're going to get a huge washout in gold. That will be it, and that will be the time to buy a well-financed gold operator. Thanks for the call.
Okay. Thank you.
Bye. And that's it. Oh, well, we've got 9 minutes left. We're going to get back into high gear here. And as I said, you can always give me a call at 877-927-6648. And you can post a message in the den, or you can email me at path@tfnn.com. Anyway, what else do we have going on? Oh, we were talking about confluence levels, so I wanted to get back into that today. Because you're probably going to be wanting to look at some of these and how they set up. I'm going to try to go through these as quickly as possible, and you can take a look at them. The first one is Air Lease out here, and especially when we're looking at the confluence levels. Hopefully you're watching on Tiger TV or in the Tiger's Den. But if you're watching my chart, I'm looking at Air Lease here. It's got a nice set up for a confluence zone, a little wider than most. And when you see these wide ones, they tend to be more a congestion zone and a little less predictive than ones that I'm going to show you here in a minute. When you look at this one, it's basically the $42.89 high of June 6th, which sets up the focus number. The two previous lows that you want to use for your calculations are June 24th of 2013 at $25.13, and the big low back on October 4th of 2011 at $17.24. Air Lease sets up a fairly nice confluence zone, but it's about about $2 wide. That's pretty wide. I like to see them, and we're going to show you here some less than 1%. And in this case, it's going to be about 2.5%. It's not uncommon to see these go through and even pierce them a little bit more than you would think. They still work. They work tough, though. It is tough to get that kind of movement that you're looking for and preciseness. When we look at a line, let's see. Oh, unfortunately, I guess that's what the problem is. I'm looking at, I still had 10 years on there from looking at CDE. Another real good one here to look at is Line Technologies, ALGN. If you want to get Tom O'Brien's book out, The Art of Timing the Trade Chart, or get my software out, The Art of Timing the Trade Charts, the software, this is a good one to get an eye full of out here. And not a bad setup, actually. Your focus number on this one was January 21st, 2014. You came down to May 8th at $47.22. That's it then bounces. So your first A point is June 2nd at $57.79, 1.2 million shares. And of course, then you get your second move, actually your focus number down here on October 15th. That sets up about a 70-cent confluence zone. So if you were looking at this and you thought, hey, I'm going to buy this out here, it's completed an ABC down, and I'm going to play it for the bounce, you've got basically about a 70-cent range and probably about an 80% probability that this thing bounces to about, $52. Yeah, probably about $52. Anywhere around $51.61, which is the bottom of that confluence range, I'm putting my little mouse pointer over it, is kind of what you would want to be looking at. Other things out here. Oh, another one. I'm not exactly sure how to pronounce this company. Symbol is ALLE, Allegon, Allegion. Who knows? A very good example, and one you can check over the next couple of days. Now, this one, you would say that it's probably a better setup for an ABC down. The reason why is this last big move down actually increased in energy. So when we look at this, basically the high of June 23rd starts all of this action. That it was at $58.29. You get your next rally point on August 19th. It came back into a heavy gap down. On August 19th, it hit $53.41. You get your bottom point down here on October 15th at $43.81. Now, that sets up a very, very tight confluence range also. And if you were thinking this is continually making ABC downs, what you would want to be looking for is the range there, which is $49.34 to $49.74. Pretty good. Now, you probably want to put your sell order somewhere in there, and you'd probably want to go maybe 50 cents or $1 higher on these because they do sometimes go. Unfortunately, they tend to go intraday a great deal of the time when they're this tight. So you want to be looking at that one. But if you want to start doing some learning out here on confluence zones, this would be a good one to look at because you probably have a fairly decent chance, I would say about 80-85% chance that this thing's going to go up and come back and test the $53.81 low at least, and it quite possibly could turn into an ABC down if energy picks back up and busts that $43.81 low with volume. It's only 1.2 million shares too, so it wouldn't take a big move to blow something out like that. We also have another one out here, Arc Toys. This one's kind of an interesting one because it's lined up right there at the moment. Basically, you're looking at the starting point on this one on June 9th at $45.68. The next, it just got hammered down to no extent on July 31st. I bet that was some kind of earnings deal. You come back, pretty much finish most of coming back into that huge move down. The September 26th high sets the last high at 38.95. You go back down here, break through the lows. You didn't have enough volume, though, to break through that 31.50 from July 31st. So now we're getting that bounce back up. And normally when you break or you come back down to these high volume lows the first time, you hit it with lighter volume, you bounce. Maybe the second time you hit it, you bounce. But what is fairly good is that you're not over testing those lows, in this case 31.50. And my guess is that this is probably about all you can expect out of Arc Toys. The symbol is ARCB. You want to be watching this over the next few days, and not saying trade it, but saying that you may get a good education about setting up confluence levels on it. Okay, our next one out here is Bright Horizons Family Solutions. My sister used to work for these folks. They have a bunch of daycare. Certainly looks to me like a long consolidation move out here. If this would fail, gives you a good idea of your risk reward. Not that I would short it, but a excellent example of finding these two longer-term fib nodes to go into the focus number. Of course, the focus number is this June 27th high at $44.16, 1.8 million shares. Your next move, your first A point out here is May 15th at 36.98. On May 15th, and then the previous one's the December 13th, 2013 low at 32.78. That sets up exactly what you want to be looking for, and that is if this thing's consolidating, comes back down with light volume, you've got about 9 cents, 9 cent wide agreement with two Fibonacci nodes out here saying that 39.72 to 39.81 is exactly where this thing's going to hit. When they get that close, 9 cents, you can pretty much say that if it gets 15% below, you pull the trigger on this thing. If it doesn't close back in, you go ahead and close the trade, or you wait until it closes back above that 39.81 and you pull the trigger on it. Pretty high probability trade out here. When we get back, we're going to look at Cardinal Health. It's set up very similarly, but it's already bounced off at that level once.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, we were looking at Cardinal Health just before we went. I just said, there's a lot of good examples out here how to set these up. And if you're wondering what you're looking for, you've got Tom O'Brien's book, or you've done the original work with Joe DiNapoli and just really never understood it. I'm giving some, what I think are some of the best examples, real-time examples happening right now. Now, of course, we put in a volume behind these, and to me, it looks to me more like Cardinal Health is making a high. But if you were looking at here at this last move and you were thinking, hey, I think this thing could continue headed up, where would you want to buy it? And, of course, you could go to just the regular 618 retracement on this thing, which it got a little underneath. But I would have had a lot more confidence looking at this at the confluence levels where we've seen two different moves and the difference between the 618 and the 382 of the other move. In this case, that makes a incredibly narrow range out here, $72.06 to $72.13. It's this tiny blue line that I'm hovering my mouse over if you're watching on Tiger TV. And this is what you should be looking for in these ABCs ups, and then you look for the pullback. If you've been making multiple ABC ups, then you want to really be looking at putting together confluence levels to go back. Now, in this case, this thing spent a day, 1 day underneath it. Or right at it, but it actually, I think, closed back above that 7205 area. And if you were real bullish on this thing, you could have pulled the trigger on it. Now, looking a little light on the volume up here, especially the last 4 or 5 days out here is volume, but kind of the same thing that the broad markets have been doing anyway. And I noticed that we lose 7 points in a heartbeat, or 1953 on mine here. But I didn't see it. And 1955, things bouncing around a little bit. I suspect we're going to see that we're extremely close to some kind of high in the S&Ps. And I see Tom O'Brien warming up in the bullpen here. We'll see what he has to say, but he gets the benefit of one more hour while the market's open to see how the volume comes in the last 10 or 15 minutes, which is I'm going to be watching. Again, I'm watching Apple extremely closely. I want to see that kind of volume I saw in 2012 if you missed the first part of the show. Again, on confluence levels, another excellent one that you can see. We've got time to get this in right before the end of the show. That is Community Bank Systems, CBU. You've got a wonderful little move out here, and you start with a March 21st high. Your next high in the confluence zone is July 1st, and of course the low out here on October 8th. That sets up a 5-cent window between $35.02 and $35 and was that or $36.07 and $36.02. Anyway, we are having a special, and that special is my newsletter this week. You will never get an opportunity, or haven't gotten an opportunity, to get it at such a tremendous price, $30 for 30 days. Make sure you go to the front page of TFNN and check that thing out. If you want to see these confluence levels when they are ripe, when you want to see the other techniques that I use, you certainly can get it. And I've got, 6 positions in the last 2 days. You want to be taking a look at them. Never a better time to sign up. Go to the front page of TFNN, under newsletters, look for my newsletter, The Path of Least Resistance. Thank you all. We'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his Opening Call newsletter. Right now, you can get a 2-week free trial to the Opening Call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.